Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 2nd, 2025. It is 10:48 a.m. Eastern Time as I'm starting the video, and just wanted to, before I get going here, wish everybody, again, a very happy, prosperous, and healthy new year. This will be the first video of the year. I also have to cut out a little before the close today, leave town, go visit some family. I've got actually a birthday to go to on the East Coast, family member, and we're going to do that. And I'll be back tomorrow, probably after the market closes. So anything big happens between the close today and all day tomorrow, I'll get an update out to you Thursday evening. If not, we'll just pick it up on Monday. All right, here's what we're going to do in this video. It'll be a little bit different. I have a list in front of me, and I've separated two columns: long trade ideas, short trade ideas. I just wanted to state my preference right now, and it's a strong preference to trade I always like to trade a diversified portfolio, meaning I like to mix up asset allocation, different asset classes, asset allocation, stocks, bonds, commodities, crypto. Those are different asset classes. And at any one point in time, it's the whole premise of diversification and asset allocation means that some things are going up, some are going down, helps smooth out the bumps. However, I do it more, I don't do the old, financial advisor approach. That used to be that, when I wore that hat many years ago as a financial advisor, it was always long. You were always long stocks, a certain percentage, bonds, old 60-40 portfolio. No, mine's more of targeted. In other words, I might be short treasury bonds at one point in time, and that's my treasury allocation, or long based on the charts. Same thing with stocks. So either way, I do. I've always believed that mix it up, have different trades. But right now in the stock market, I can make a case that we're going to rally in the first part of the year, maybe out of the gates here, and I can make the case, which I have, that we're going to drop. I still believe the charts are strongly indicating we'll have a big drop coming up. Over the next year or so, the tune of about 50% is my downside target on the NASDAQ 100. That hasn't changed. And we had some potential sell signals recently. I'll get to that when I get to the equity markets. However, as an active trader, we'll also have some long trade ideas right now in the equity markets. But the takeaway here is, again, at this point in time, especially because most of the long-term, just about all my longer-term indicators are bullish right now in the equity markets. I have a lot of short-term indicators that are some that are bearish, and as such, again, I think it's a good time to be selective, and it's a stock pickers market. In other words, I'll get to that in a second, but the market's been going sideways. We never got that Santa rally that everybody in the media was clamoring for. It was baked in, it didn't come. So what's happening is swing or trend traders or even investors in the stock market, and 2024 was a positive year, but the last month just kind of market's been moving sideways, going nowhere. But there's a lot of opportunity in individual stock picking. There are times where just about everything goes up, and it's easy to buy the S&P 500 or the NASDAQ 100. And then there are times where things start getting a little wonky, market breadth. You can see, it's been a handful of stocks holding the market up. And then at that point in time, even if the market's going sideways or chopping around, then it's a stock pickers market. So we're going to go over that. And so let me just dive into it because I have so many to cover. Again, I'm going to go over the long trade ideas. Then I'll cover the short trade ideas. I'm going to put the equity markets in that short column. I don't have as many. Let me start out here with MKTX. This is Market Access Holdings. We've traded this one for years, and pretty damn good track record on this one. A lot more wins, and almost all wins. I can't recall many losses on this one. And big gains too. We were long here back in 2022. We rode that thing up. Can't remember exactly where we closed out. I believe it was right there was the final target. Then we turned around. I highlighted this bearish rising wedge with the sell signal coming to breakdown. Rode it down short. Hit a divergent low. You can see it trades off these divergent lows, divergent highs, and then you look for the sell signals. So there are some stocks and some indexes and sectors that just trade, in my opinion, very well to the technicals, more so than others, at least my style of technical analysis. which may or may not be someone else's. And so most recently we had this divergent low. We were along here on the stock there. I highlighted the breakout and back test, and you can see it rallied up right here. I've had these levels here, 295. That's created that back in 2023, that level there. So we used it before as price target, probably back here. We hit that final target, a little wedge there. And then it broke down right here below that well-defined price channel. And it's been a heck of a correction. And the stock is very oversold. Now, oversold in itself is not a buy signal, but you have the PPO turning up at low levels, very oversold, and support. This is a support level I've had here for quite a while, 228.47. Let's not overthink it. It's, take it, don't take it. Right now, as you know, just recently I put out a long trade on treasuries. I'm still near-term bullish treasuries, longer-term bearish, but near-term bullish and long. And so a stop somewhat below. Somewhat would be relative to your target. There's a big old gap right here. So minimum, I think a bottom of the gap right there, and maximum right now, at this point in time, the top of the gap. Just looking for a bounce trade, just like treasuries, not getting married to this one. Although, longer term, if something else happens and it breaks out above this 295 level, that would be quite bullish. That's a pretty big level to watch there. And it's also another potential target if this trade gets some traction and doesn't get stopped out. So that's MKTX, market access. Etsy is still a long trade idea on the site. Somebody asked about it a couple weeks ago. I told him it still looks fine. We had it here. We took it on a break above. The buy signal was to come on a break above 56.39, I believe, if I'm remembering correctly. I know it was this bullish falling wedge I was highlighting here. Big wedge, breakout, and then you had some price resistance there, R1. What we did is we went up, reversed a little shy of my first target zone, but as I mentioned just like a week or so ago in one of the comment sections, it's a back test of the wedge. So sometimes you break out, you never look back, or at least you hit the first target and then pull back and then go up. Sometimes you break out and you back test. So as long as we remain above that trend line, then it is an objective long, and it's an objective long entry right now. On the back test, just above the just off the back test with a stop somewhat below. So that's Etsy. Nothing's changed. Again, stops should be relative to one's price target. If you're quite bullish, to hit T6, I would say with a strong degree of confidence, that's going to take the stock market doing pretty well in 2020 or, the first half of 2025. We'll see. So right now, I'm just going to tell you I'm not favoring T6 being hit. But if we can rally up here, take out that previous high, take out my first target zone, then we've got a good shot of hitting a couple of these first targets again. Largely depending, not exclusively, but largely depending on how the stock market does. So I'll continue to update that. As with any trade that I've shared, if you want an update and I haven't given one, just drop a little question in any of the comment sections under the most recent post, and I'll get back to that as soon as possible. Pepsi, I've mentioned this in a video recently. Still like this if you're looking for a steady Eddie blue chip dividend paying stock. Long-term support here at 148, big divergent low on the weekly chart. You're buying Pepsi at a 25% discount where it was back here at the peak. We have started some new secular, much larger bear market. Yes, Pepsi will go down over time. This is my next long-term target down here. However, nice positive divergence on the weekly. Still needs to be confirmed with a bullish crossover on the PPO before it puts in a new low. That hasn't happened yet. But it's one of my type of trades. I take stocks that pull back to support. I like to see positive divergence. It's not absolutely necessary, but it helps, and that's it. So this one's pulled back to support, as I just showed you on the weekly and daily charts, 149.20 with the next buy signal. So maybe a partial position here above support, and or add if it breaks out. You have a little range of consolidation right here, so I think if it can punch through there, plus you have the nice downtrend line, so boom, pop that trend line, and Pepsi should go where to? I'd say at this point in time, again, depending on market conditions and everything else, what happens in the coming months, up to this trend line there, and that would be about if and when we got there, and the 170, 150 level, that's where it should come in around that time. So you're looking at about a 12% rally. If the market craps out, it's going to take Pepsi with it. Pepsi's a big index stock, so forced selling in the indexes will bring down these stocks that are components of the S&P 500 or NASDAQ 100. Still like the ag input stocks going into 2025. This is CTVA. I started highlighting these several months back. Most have gone up from there. A lot hit targets reversed. For example, that was CTVA first. This is NTR. Hit that first price target, pulled back. Typical reaction, and the 200-day moving averages to put in a marginal new but still divergent low. It has big divergence building. As I've stated, I believe these will run when the grains finally, especially wheat, breaks out. And I'm still bullish on those. I'll get to those in a second. So most likely you need to see the ag commodities, particularly the grains, start to move up, and then you'll see these guys usually go with those. CF already hit that first target. Mosaic, same thing, hit T1 or close enough to, I just covered that one, I think. Divergent low. ICL hit, we break out there. We hit first T1, T2. You can see T2 has been hit. And looks like it just needs to take out that previous high. There's T2. And so that one still looks good. If you have any other questions on any of them, some I highlighted in recent videos I like more than others. I'm just clicking through the list here. And then you get down to these smaller ones. They're a higher risk but higher gain potential. So either way, that's the update there. And then on a related note, wheat, corn, soybean. Wheat still has that nice bullish falling wedge here on the daily chart with big divergences that have been building, just waiting for a break of that trend line in both wheat futures, CW, as well as wheat, the ETN WEAT here. You can see it's been testing that trend line, ready to go. I still have some pretty lofty targets for this one. And again, still very much like the outlook of the grains. We just need to break out on wheat, as I said, and also diversify here. I like to diversify. You never know which one's going to outperform of the three big grains, wheat, corn, or soybeans. But corn, you have this trading range there, which I've highlighted recently. It's been pushing up against that. That's nice resistance. See that reaction low right there? And that's capped it. We already broke out of the downtrend line. And if it can just pop that level, it should start to run. And done this long enough that if corn continues to run, and soybeans especially, and wheat's lagging behind, or any of the other way around, the one that lags usually catches up to the other two. So there's corn, just like wheat, on the verge of breaking out. Soybeans, I'm going to tweak my trend line here a little bit just to retrofit it a little, get that those reactions 1, 2, 3. And so boom, they're all ready to go. Bullish falling wedges just need that spark, that little catalyst, the breakout. And you know, obviously the clearer the breakout is, the farther they get away from there, the more likely it is to stick. So there's your update on the grains and the ag input stocks. It should probably move with them. But keep in mind, one little caveat I'll throw in there is ag input stocks, just like gold mining stocks, they are stocks, they're equities. So there are times of market duress where the stock market's in a big sell-off, S&P's dropping, and just about all stocks get taken down. So it is possible to see the grains rally and the ag input stocks fall if the stock market is in a big impulsive correction mode. Same thing with the gold mining stocks. I've seen 99.9% of time, or 99, when gold goes up, they go up a multiple of gold. But there are times I've seen where gold goes up as a flight to safety during strong stock market sell-off, and the miners go down because they are, at the end of the day, stocks. They are not gold. All right, and that brings me to that. That's next on my list, actually. GDX, I shared as a trade idea for you recently. What board did I give you? Right here. Give you a sold target. Keep it simple. So you can go long here at the support zone. I liked at the top of the zone, down to, but not below the bottom of the zone at 32.32. And so far, we're having a good day today, 3.36%. Nothing big, but what it's doing, it's turning up the PPO. As I said, we had unconfirmed divergence. I want to see that PPO make a bullish crossover at a higher point to put in a higher low. And so if we can build on this rally, then that's what we'll get. Nice positive divergence. You know me, that's what I like to see on the metals and miners. I've highlighted, I believe, just about, if not all of these divergent highs and lows as bullish and bearish entries. And this is swing trading. This is where A gold bug, is the term used for someone that loves gold mining stocks, and they're always bullish on gold mining stocks no matter what they're doing. A gold bug's gone exactly nowhere now for years. This goes back to 2020. You've gone up a little, down a little. This is what we do here, day in, day out. This is what the primary goal of this site is: swing trading. Investing, it doesn't take, if you can go back in time and say put all your money in Apple or Amazon, if you had the foresight to do that and hold, great. That's long-term stuff. Or Warren Buffett, you got a 50-year time horizon, buy the S&P, throw away the key, and you'll be good. But what we tried to do here is game these rips and dips, and the double-digit rallies, 46% there, and then you get out and you short it and turn around and make 50%. Again, if I'm just playing the high to low game, but quite often that's what I like to do, is catch these turns. That's part of my trading styles, identify the pivots. And that was the most recent divergent low. We were long and bullish right there at the low, like literally that day. Laid out price targets, and hit all of the price targets that went up beyond there. But then more recently here, highlighted that divergent high. And again, so it's a wash, rinse, repeat thing. It's not written here, but let me just borrow that, duplicate that, and that's it. So divergent high, down to support, divergent low, bounce, maybe not. And that's what stops are for. If it takes out the divergent, if it takes out the bottom of the support zone, it's also going to take out the divergence. Natural gas. This one has been working out almost perfectly as far as a long-term call, and even the short-term kind of sidestep. Told you that day we were up 25% last Monday. Futures gapped up Sunday evening, and told you that 25% a day is about all you get out of it, and turn around and you short it, which I did. Got a little pullback, and I gave you a buy zone, and let me find that for you. It was either in one of the homepage posts or the comment section, but what I said in there was, this is NG. Hold on, let me fix this chart so you can see everything there. This is NG. Said re-entry points was this gap right here. I said either you can down to about the 365 level right there, or down to 355. That was the breakout point right there. And boy, we hit that to the button. Bounce so far, perfect re-entry. So this was a scale back in zone. And because I said you don't want to chase when it's up 25%. If anything, you'll wait for a pullback or short and get a little pullback. So that's good. So, there's another gap. It can go down here. Sometimes it's quite often I'll see something break out. Again, it was a very, very well-defined resistance level. Before it even happened, I used the words, you can probably get a potential explosive rally or very relatively swift run up to my $5 target. And that was the start of it. We just had a lot of profit taken on that. It wasn't just the 25% one-day gain. It's also been a nice gain off the bottom, however. So right now, what I was getting at, sometimes you come and back test, and the powers that be, the nefarious forces, evil forces in the market, will try to, run the stops. So if they can pull it back down, traders will think the breakout failed. So I usually give it a little room, and there's a gap right there. So really anything down to there, I wouldn't add at this point. I wouldn't add on a failed breakout. I would only add on a recovery back above. That was the buy point I listed last week. Down to that level there, I would sit tight and start to be concerned about stopping out much below there or there if you want to keep stops tight. However, I've made the case long term, the charts are still very constructive, and I still maintain that $5 price target. So, if it pulls back to here, if I happen to let it go, I'll most likely be buying back in there. It depends on how the charts look. I'm probably getting 5 steps ahead of myself right now. All I can tell you is that was the pullback zone right there, that nice gap right there. The gap really started here, but again, it's the top of that the breakout point we gapped above. So still looks good, guys, in my opinion. And time to be back into a decent position. Alrighty, next up on my list is TLT, Treasury bonds. That's the long bond, 30-year bond. It's not really running yet, but we still have the divergent low right here on the 60-minute chart, the breakout, a little wedge, and we have this area of consolidation. So we just need to punch up there. Gosh, I gave you a target. Yeah, there's my targets right there. So If that runs, like I said, market access should run. And I also continue to view this as an indirect hedge to index shorts, meaning if you're short QQQ or anything SPY, IWM, because if the market does crap out here in the beginning of the year, then we'll probably see a flight to safety bid in treasuries. Two forces will bring treasury prices up and yields down. Remember, treasury yields, or the rates are paying, and prices always move inverse. That is an immutable relationship. It's not one of those on-off like I talked about gold and GDX. You can see the miners going down when gold goes up. It's unusual, but it can happen. There is no variation in the correlation, inverse correlation between treasury bond prices and yields. It's a fixed correlation. So therefore, two things can cause treasury bonds to rally right now, in my opinion. One would be a flight to safety bid. And again, I'm speaking more towards the indirect hedge trade with being short the indexes and long treasuries. If the markets crap out here, remember, some of my favorite shorts, as I mentioned in the NASDAQ 100, Tesla, Netflix are my two top picks. I've maintained those. Apple's weak today out of the gate, so believe me, I'm not gung-ho on this short-term bounce I'm trying to gain. I'm completely open to the market just continuing to build on the sell signals we got a few weeks ago, the big bearish engulfing candles on the weekly. If that happens, there's a good chance you'll see a flight to safety bid. And the other factor that can bring treasury yields up, if the stock market goes down, and I feel 100% confident in what I'm about to say here. If you're wondering how my 50% drop in the market can play out, and there's no, guys, you know that, there's no guarantee. I had those same targets last year, and they're still not, there's no sign of them being hit yet, or, not even close or closer to the highs. But the charts are every bit of the technical case I made before. The big divergences on the weekly charts and even the monthly charts have only gotten bigger. Sentiment has become more extreme. Market breadth, the internals, the deterioration in the internals has gotten a lot worse. So all I can tell you, my job is just to share my opinion. My convictions are quite a bit stronger right now than they were, 3, 4, 5 months ago. That we're going to have a big drop in the coming, over the next year or so. So where I'm going with that is, if you're wondering how those 50% drops, when you got Tom Lee and every bull out there and every wirehouse and CNBC telling you, oh, okay, well, all right, maybe it's going to be a little choppy year, not down, but nobody sees, very few see a 50% drop. Don't underestimate the wealth effect. And so it's simple. The charts start to play out, because I hear a lot of folks, I am hearing some calls now for corrections. Like, one guy is pretty bearish, but he was saying maybe a 10% drop. Well, selling begets more selling. You have a 10% drop, people lose 10% in their 401k. Most people are leveraged out. A lot of people right now are leveraged out. So even if the S&P drops 10%, the NASDAQ's going to go down more. They've got a overloaded with overlapped stuff. They don't realize. They think they're diversified. The Bitcoin will fall in line with equities. And so people are going to see, they're going to have a lot more than 10% losses. And then at that point, selling begets more selling. And the wealth effect then kicks in. So economic growth, people have been spending money like crazy, buying new cars and boats and second houses with the booming stock market. So that starts to reel in. And then it takes out that final pillar, consumer spending. And that's how it happens. That's how, if you want to know fundamentally, I can see in the charts the probability of that 50% drop. But if you want to know fundamentally how it's coming, because nobody out there talks about, these economists, that's it right there. It's the same reason we got to where we are. It's, they gun the market full of liquidity after COVID, and the wealth effect sent home prices skyrocketing. I'm sorry, the liquidity, the zero interest rates, and the excessive stimulus, and that's parlayed into a strong economy, and it's going to go the other way. And then when it does, where I was going with treasuries is, long-term rate expectations and inflation expectations then fall along with the stock market, and that's where you can see, and likely will see, as rates drop, Again, they're two separate things. You can get the flight to safety bid if the stock market's under, and the stock market needs to be under pretty heavy selling to get that, not just a orderly correction. But then you also have the diminished economic expectations, growth expectations, which bring down inflation expectations and interest rates. So that's it. And again, it's one trade. Don't fall in love with it. It either pans out or not. Set your stops accordingly. All right, too much time spent on that. Rocket, not screaming buy right now, but remember we milked this one down from, I forget where we shorted it, right about here. We just hit our fifth and final target. These targets were not modified, edited along. There was a 40-something% drop, but it's getting down to the point where we're getting, at the very least, there's going to be a short squeeze coming. So what I think will be the catalyst, if I'm right on treasuries and we do get a bounce on treasury bonds, that means yields go down. This is one of the mortgage companies, so they're going to see a spike in mortgages, mortgage applications, refis. And so, and there's also a little reaction low right here that I could have set my final target. I just didn't want to try to squeeze out for that. So it's at support, and PPO is about poised to cross over. So I think this one's good for a bounce trade, short squeeze, and that's going to be about a 15% gain. Target is that trend line right here, this downtrend line that I've had. So that's the one trade idea for you. Partner in crime was UWMC. I shared them both on the same day. We shorted them both at the same time in the same post back. Again, I forget exactly where the short entry was. Somewhere in here. We hit our first, second, and third target recently. I had a fourth target. I'm going to tell you right now, it's possible. I'll just leave it there for those that want to swing it down. But you have a bullish falling wedge setting up right now. And if the market rallies, especially, or treasuries have a pretty good pullback in yields, this wedge is probably going to pop. And you're looking for, I think, a move back at minimum, back to my second target here at 662. It was support on the way down. Support, once broken, becomes resistance. You can see we hit it there. We hit my T2 here. We consolidated on it. And then after we hit T3, we bounced. As expected, upon the initial tag each target, there's usually a reaction. Where'd we bounce to? Right back to T2. So you could have recycled back in short there and swung it down. But again, it's not on a buy signal, but if it pops that trend line, it would be. So there's an idea for you. And again, market can, if the stock market rallies, even if treasuries kind of hold up and don't, rally much, but if the stock market rallies, you'll probably get some short covering in these guys soon. So definitely would not be adding to any shorts now, and if anything, cover and or tighten up stops. PayPal, PYPL, that's an official trade idea. It's been on the site for a while. We had highlighted back here, a trend line breakout and back test. We hit my first and second target. We've been consolidating on T2. There is negative divergence, potential wedge, but we are coming off a much bigger divergent low. And again, this one is kind of my conviction right now on whether my third and fourth, well, that's just a potential target. It's not official yet. This is still the final official target. Whether or not it's going to be hit will likely depend on whether the market can hold up or not. If the market craps out, this divergence will probably play out, and that's probably it. So good time to tighten up stops on this one. I forget exactly where we entered, but obviously it's pretty profitable and no reason to let a winning trade become a loser at this point in time. Energy stocks. I like the energy stocks. I've liked them for a little bit now. This is XOP, the oil and gas exploration and production ETF. Positive divergence on support, rally, but it just hit resistance. Wouldn't be buying right now, although crude just kind of broke out of a trading range, so it might have some more traction. I just wanted to point them out for you. So these are, I'm just kind of showing you the charts coming off these big divergent lows right here. This is XES. Last time we had a divergent low right there. Then before that was there. You could see what happened off the divergent low. We got that rally. We got that rally. And so probably some more upside to at least this level here, 87.40. Especially if the breakout crude continues. I'll get to that in 1 second for you. The big energy ETF is XLE. That's the main one, most actively traded. And there's an uptrend line we just hit with price support as well, but it's at resistance now. So if it can pop that, probably run up here. By the way, I just got a price alert on corn. popped up on my monitor. So it's probably trying to punch through that trading range I covered earlier right now. Here, I'll show it to you. It's right on there. Needs a little more work. All right, so energy stocks, just like GDX follows gold, the energy stocks follow crude oil. So crude it's been sloppy. I've been telling you that lately. I haven't been doing a lot of updates because we've been in a sloppy, choppy trading range, but it just broke out of that trading range. It's probably heading up here to 79. This is USO. And so that's where there's probably a little more upside before the energy stocks take a breather and maybe recycle back in on a pullback, or take profits if you happen to be in them, if you're an active trader. Bitcoin, IBIT, I shared with you as a trade idea. It still is an active trade. 60-minute chart I gave it to you on. Divergent high here. We hit my S1, which means first support hit. We bounced. We put in a marginal new, but still divergent high. And we keep hitting my S1 level. Again, I gave that to you back here. And we just need to break that level. Whether it breaks and how far we go will likely, not necessarily, but likely depend on what the stock market does. If the stock market craps out, then Bitcoin, it being a risk on trade, it's been trading in line with the stock market lately, rallying when stocks, especially high risk, high flying tech stocks rally, and then going down when stocks correct. So still maintain these targets. Related trade on that was MSTR, MicroStrategy. They buy Bitcoin. We hit my second target, so mark that as hit. And still like this one. This is a swing trade. Odds favor a bounce. Well, we just did. We're bouncing today a little bit, 3.4%. It's a volatile stock. So once we take out T2, especially after a nice bounce to offset or clear out the very near-term oversold conditions, still maintain T3 and T4 will be hit. Remember, this one, just like QQQ, was based off a bearish engulfing candle. In QQQ, we have a swing or trend short based on the weekly bearish engulfing from a few weeks ago. I'll get to that in a second. This one, that's where we shorted this one after the bearish engulfing candle. Then we had the trend line break, and that's it. So, so far, not that we shorted the high of that candle. I can't remember. Maybe remember exactly where we entered, but it's down 44% already. So with that, beta adjust your position size. You're going to trade a stock that goes down 44% in a couple weeks. It goes up 44, 50, 100% in a couple months. That means it's very volatile, like natural gas. You don't need to put as much into it to make as much. And that way, when you put a smaller position size, maybe a third, a half, no more than a half of a typical position size, you don't get shaken out in the counter trend moves. You don't feel the pain as much. So it's easier to swing and keep your eye on the prize. So the prize right now remains these final targets down here. Big divergent high. I still like that one very much. QQQ. I'm just going in the order I wrote them down here, guys. Just scratched it down. QQQ. 15-minute chart, just to get nitty gritty. This is what I gave you last week. Bullish falling wedge, which broke out this morning and back tested, rallied up here, pulled back. We're still above the breakout. We're back at where we were last on Friday when I highlighted, and where we broke out this morning, and positive divergence there. It's only a 15-minute chart, so it's just short-term stuff. I give you a couple targets here if we can hold up. So far, not a lot of follow through on the breakout, but it's still above the breakout, so it's still on a buy signal on that time frame. And again, I try to do my best. No matter what, I get questions put to me all the time about differentiating between short-term active trading. These are trades that are measured in usually just a matter of days, sometimes even hours. But usually no more than a week or so, very short-term active trading stuff, and then long-term swing trading or trend trading. So there's QQQ on the near term, still like it, still on those buy signals. As I told you, NQ, we're not going to go anywhere until NQ takes out this yellow trend line I gave you today, and then I have some price resistance just above it, about 21,505. Boom, that'll be your next buy signal if taken out, which still favor, and then game a little bounce, and then maybe get back short again. I may not be around and when those targets are hit to tell you and give you my thoughts, so that's why I do these videos and get the charts out to you. Only again because I'm leaving town today. This is long-term weekly chart. Where are we at here? We'll just use this one here. There's the bearish engulfing again, with a stop above that for a long-term swing slash trend trade. This is the primary uptrend line off the August 5th lows I've been harping on almost on a daily basis for months now. That was taken out. We are clearly trading below that right now. So that is another what I call check mark for a long-term swing trade, a bearish case in the equity markets. Check on the bearish engulfing candle, check on the break below the trend line, stop right there. Again, price targets are T7 is my final target, still has been for a while. That's down around 260, which again, from where we're at now, would be about a 50% drop. And so that's QQQ. SPY, somebody asked me for levels on SPY. Let me give you that real quick. Well, let's start here on the weekly chart. This is the trend line off the August 5th lows right there, which we're also below as well on SPY. Jump down to a daily chart. There it is again, August 5th lows, trend line breakdown, perfect back test, and we continue to dance on this 584.50-ish support. You can see it was resistance here, it was all-time high. We had a breakout candle right there, perfect back test for about 4 days. We back tested that level. We successfully back tested again here, and we've been back testing it there. It's good support. So you need to see a solid break, especially a solid red close, daily close below that. This is a daily chart to signal trigger a sell signal. Then you have next support here, there, and the 200-day moving averages. Otherwise, support is support until unless broken. Maybe we go up. Maybe we back test the trend line again. Maybe we go to new highs. I don't know. All I can tell you is if, unless you break this support, we're not going any lower. It's that simple. It really is. And so that was a 1 day. That was a holiday candle there, pre-holidays right before Christmas. And we closed above it. It's a daily chart. So the fact we violated intraday means nothing. This is where we closed. It's a green candle. So all successful defenses of that level so far. That would be a big one. Traders will step in and sell that, especially again on a red close below there. All right, there's your levels on SPY to get a little more granular. This is a 60-minute chart. There's a trend line off the August 5th lows, the back test I just showed you, and you can see my levels right there. IWM, small caps are dancing the line, riding up the uptrend line. Daily chart, you have a primary trend line right here. I know this is a busy board, a lot of horizontal lines. I'm just going to draw it for you. This is the October 2023 lows. Nice, well-defined trend line right there. And we've been dancing on it. So just like SPY, we're on support. And again, support is support until unless broken. So that's why I'm making the case and personally long QQQ since last Friday, whatever it was. You have IWM at support, but if all these levels break, if SPY takes out the recent lows, IWM takes out the recent lows. IWM is also just above its 200-day moving averages. So that'll be a pretty powerful sell signal on the small caps, and I'm sharing this as a short setup right now. At this point in time, the only trade to be made today is to go long because you're at support. You don't short support, especially when you're above it. You short a break of support or you go long on pullbacks of support. This is a pretty big level. That's why I have it yellow, 226.72. It was all-time highs, breakout, successful back test, rally, failed breakout. So right now, there's cross currents there, but that's what you can see is we had a breakout which clearly failed. We're below the breakout level right now, but we're also on uptrend line support with the 200s just below. So a lot of big levels to watch. And that's again why I do these long-winded videos. It's easy to replicate these charts. Set them on your own. Somebody asked me what, I'm sorry, there was a question, what charting platforms you use. I have multiple brokers. I have at least three or four brokers. They all have good charting platforms. What used to be Ameritrade and then was it's now Schwab. They have the Thinkorswim platform, great charts there. This is TC2000, kind of my go-to. Depending on which brokerage I'm using, I run multiple monitors. So if you ask what charts I use, it's a lot of them. Most of your brokers will have good charts. all have their pros and cons. So pick a broker. If you had to pick just one, again, I like that Thinkorswim trading platform. The charts on there. TC2000 is a paid subscription version. Oh, I use stockcharts.com. I show you those charts a lot. That's also premium, but they also have free versions. So those are the big ones. Stockcharts.com. TradingView has some good charts. TC2000. And again, a lot of you, if you're just starting out, pick a broker, one of the mainstream brokers. Most of them, even if it's Fidelity, they all have good charts. You could probably do, and then just replicate the charts. The main thing is make sure you use log scaling. A lot of times they'll default to linear, aka arithmetic scaling. Use log scaling, you're going to get a different picture. It's not going to look the same. The trend lines won't line up. Alrighty, we are almost done. Another potential trade idea. When the markets break, take the next leg down. Carvana. It's been a while since I revisited this one. This one has a series of divergent highs followed by corrections. They're all labeled here. That divergent high, you had a 56% drop, even in a bull trend. So it's a great swing trading vehicle. 36%, 28, 25, 20. And this is the most recent divergent high. And so far we hit that 188.26 support. And it's been about a 28% drop. So it's very simple. Very, very simple setup to me. Objective short entry on a break below the recent low, because that was support. It was a level I had there. I've created that line back on October 31st. You can see, and we just hit it yesterday to the button, bounce. So this one offers an objective short entry either on a back test, and you have some rough, it's not super well defined price resistance there, and or means you can do that short half position there, and or another half on a break below the recent lows. Maybe we never back test. That's why I say and or. But a break of that low will open the door. They might hiccup on the 200-day moving averages, but you can see my first swing target's 125, which from where we're at now, that's going to be a drop of another 40% roughly. It's Carvana, big divergent. Oh, by the way, guys, these are little divergent highs. You see this in a bull trend, just like in a bear trend. You get sometimes a series of divergent lows, and it's that one big final divergent low, like it was right here, that triggers the trend reversal. And so what this is, it's just a series of smaller divergent highs that make up one much larger big divergent high. So ultimately, this stock goes down a lot more than just those near-term targets. And again, you have a primary uptrend light right here that needs to be taken out. And then that'll open the door for a much bigger drop. So this is one of my favorites, bear market stocks. The two big top 10 components of the NASDAQ 100 I've been talking about for the last couple weeks now is my two favorites. Again, in the top 10 holdings are Tesla and Netflix. Tesla's coming up the first target. You can say it was a Cybertruck blowing up the other day in front of that Trump hotel, but that's, that obviously didn't help. But the stock already took out, recently I told you this trend line here, break of that, and then the break of the 416 support, which we did last week. So the stock had already broken support. So it's heading down towards my first target, T2, 3, 4, 5, 6 long-term targets. And then Netflix, the theme, I'll probably do kind of a 2025 theme video with some of my longer term outlooks and things I think will have present opportunities this coming year. But one of them, if I was a blogger, or what do you call it, social media, I don't do anything on social media, but I would have a little hashtag, and cancel would be my little theme for this year. I think we're going to see that'll be a theme going forward in 2025 as the recession starts to really take hold and becomes apparent to most, if not all. You'll see a ton of these streaming services, Hulu, Netflix. I might have mentioned it in one of the recent videos. I mean, it's crazy the number that I have. My YouTube TV, I started that in 2016. I was actually what do they call it? Early adopter when Google was rolling out YouTube TV to select markets. They even said they may not keep it going. They were going to try it. $35 a month I was paying. I just had my latest rate hike. I'm at now 85, I think, plus tax brings me to 90 something dollars. So my cost on YouTube TV has almost tripled since I started it in 2016, and I haven't added any services. They force things down, that I don't want. That's just the basic package. Although right now there's other streaming services. So then you add in Netflix, Paramount Plus, Apple TV. God, what else am I missing? And can I afford it? Yeah, I'm sure there's a lot of people out there that listen to my voice that can afford, to have 5, 6 streaming services. But again, it's just a call that I'm making for the upcoming year. We're going to see a lot of these. People are going to start to realize where they need to start trimming the fat when the stock market goes down and the job market rolls over. You're going to see a lot of these streaming services. I think get cancellations. People, reeling in, kind of getting a handle on all these membership plans they have. Not to mention the price hikes. I mean, look at Spotify. I just looked at my credit card bill the other day. I think I'm paying like $25 a month now for the family plan on Spotify. That's I know probably doubled since I've started that. Anywho, all right, let's go continue on. That's about it, guys. It's a long-winded video. 45 minutes, but I've covered a lot of trade ideas. Obviously, it's not everything out there right now. I will do my best to get back to any questions or chart requests before I leave town. But let's wrap it up here. That's kind of some of the stuff I'm watching right now, and my view on the markets, which is near-term bullish, looking for a little bounce here. And if it doesn't materialize, then that's that. Get back into shorts. I still have, I told you, I wear multiple hats. I have long-term accounts, swing positions and trend positions, and then I have the active trading account. That's the one I like to reverse and do these little bounce trades. So I try my best to differentiate that, because I know I confuse people. 5-minute charts, 15-minute charts have nothing to do with the monthly charts and the weekly charts. I may be long-term bullish something at any one point in time, but short at that moment. Because the charts tell me to be for a few hours, a few days. All right, guys, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day, and again, Happy New Year.